Well, good morning and welcome, and thank you all for joining us for our VCCI COVID-19 webinar, which today is banking in the post-COVID-19 era, with our very special guest, ANZ Bank CEO Shayne Elliott. I'd firstly like to take this opportunity to acknowledge the traditional owners of the land on which we meet today, and in fact, wherever you are joining us from today, and would like to pay my respects to their elders, past, present and emerging. I'm Paul Guerra, Chief Executive of the Victorian Chamber of Commerce and Industry, and together with our President, Karen Sobels, it's my great pleasure to welcome you today to this very timely webinar. Hey, but first, how good does it feel to be a Victorian today after yesterday's announcement? The state is alive with business now being able to operate pretty much across the board. It was a great announcement yesterday. As we recover from the COVID-19 restrictions and revive our economy, it's crucial that Victorian businesses are equipped and ready to thrive in what will be a COVID normal era. This webinar will provide valuable insights into how you can protect and grow your business and, of course, your personal assets as we rebuild. Therefore, we're delighted to have Shayne with us today to explain the banking landscape, and there will be an audience Q&A section at the end, so please, you can type your questions into the Q&A box throughout the sessions, and I'll hand over to Chanel at that later on in the webinar to ask Shayne directly your questions. But with that, I'd like to introduce Michelle Windsor, one of our Victorian Chamber board members, to introduce Shayne Elliott.
Thank you very much, Paul. It is an absolute pleasure to introduce our guest speaker, Shayne Elliott. Within the Victorian Chamber of Commerce, we are always looking for ways to add value to our members and to help them be successful in their business. 2020 has certainly been a challenging year for Victorian businesses, but we are starting to see the way forward with some great changes. The way that business owners work with their bank is extremely important, and we felt that there was real benefit in hearing from one of the key Victorian bank CEOs. So Shayne Elliott has been the CEO of ANZ since 2012 and has had over 30 years experience in banking, both in Australia and overseas, across all aspects of the industry. Shayne has been with ANZ since June 2009 when he joined as the CEO for Institutional. His prior experience includes senior executive roles with EFG Hermes in the Middle East, and prior to that, he spent 20 years with Citibank Citigroup in UK, New Zealand, USA, Egypt, Australia, and Hong Kong. He has covered most of the globe. The role of CEO for a major bank is extremely busy with many and varied demands. But my observation of Shayne is that he always makes himself available to speak to customers, media, and the public. Shayne, we are very appreciative of you giving us your time today, and we are very interested in your views on banking in Victoria post-COVID-19. Thank you so much for joining us, and I'll now hand over to Shayne to share his insights.
Okay, great. Well, thanks everybody for the opportunity. I guess the world's changing very fast, and that's what we've learned this year. And as you say, literally every week we learn something new about the operating environment. I might just make a few remarks about how we've dealt into COVID, both as an operator, as just somebody running a large business, and I'll talk a little bit about ANZ, and then obviously as a bank and what it means for our customers. So just, you all know ANZ, I don't have to tell you who we are, what we do, but perhaps just a few reminders of the sort of scale of the business. So we're almost 200 years old. Melbourne is our home. We employ about 40,000 people across 33 markets in the world. Half of our staff actually live outside Australia, so a little less than half actually call Australia home. And of them, the vast majority do actually call Victoria and Melbourne home. So we're a big employer here in the state and in the city. We run three major divisions, and they've all dealt with this slightly differently. And our experience of COVID has obviously been influenced by our international network. Those 33 markets we operate in, most of them are in Asia Pacific. So we operate right from Japan and China all the way down through Southeast Asia across to India. And then obviously we have offices in Europe and North America as well. We have three major divisions. So the one that you're probably most familiar with or is the most visible is our Australia Retail and Commercial Bank, where we help people buy and own a home or start and run a small business. We have about 5 to 6 million customers across the country in that business. Then we have a similar business in New Zealand, which we do the same. In New Zealand, we're the largest bank in New Zealand, we're the largest company in New Zealand, we're the largest taxpayer in New Zealand, and we're the largest employer in New Zealand. We've been there for a long time as well. But essentially, again, our business here is very focused on helping people buy and own a home or start and run a small business. And then we have our international or our institutional division, which is really servicing the big end of town. Only has about 4,000 customers globally. So those are typically other financial institutions and multinationals. And what we do there is we really help people move goods and money around the region. So if you're in the business of importing, exporting things, or actually moving money, investing or transacting in other parts of the world, that's what we do very well. And that's where our international network it really differentiates ANZ. How did we deal with this COVID thing? Well, we were sort of lucky in a funny way. Because of our international experience, it hit our business very early on. In fact, while we don't have an office in Wuhan, we do have a number of offices across China. And so we were sort of right at the front of this in our China business. And so that gave us an enormous advantage. Our people in China were sort of trailblazers in terms of the experience. So how do you operate a business? How do you send people home? How do you get into sort of your own health checking responsibility as an employer? How do you think about health and safety, et cetera? What are the impacts on customers? So we were there literally from December experiencing that. Never did we imagine that it was going to become the global pandemic that it did, but we were able to, as it did expand, we were able to really draw on our experience in China and apply those learnings elsewhere. So what that meant is when the virus hit here in Australia, really in March, like a lot of private sector firms, we were pretty quick to respond. So we were already sending people home well before we were told to. We already had installed temperature checking and protocols and cleaning, and we'd shut down all the sort of social areas in our offices, et cetera. And again, well before we were told to. And that was really just based on our own experience of operating elsewhere. So like a lot of companies, we recognized this was going to require massive change, and we implemented a sort of 4-point plan, if you will. And the plan was protect, adapt, engage, prepare. I'll just walk through that really quickly. So the first obligation we had was to protect the bank, our customers, and our people. And so that was, doing what we do well, shoring up our balance sheet, making sure we had the right reserves, the right levels of capital to continue to operate, looking after our people, as I mentioned, and also keeping really close to our customers to understand what they were requiring. So that was the most obvious first step. The second was adapt. We had to adapt to this whole new way of working. And so we have, again, like many of you on the call, we have 95% of our people, or we had 95% of our people globally who could working from home. And so we moved to that across literally 33 countries within a matter of weeks. And I think we surprised ourselves how well that all held up, the technology, the service levels, all of those things. From a customer's perspective, there really was no change. And so we were able to adapt to that new world pretty quickly, and we continue to adapt. And I'm sure there'll be questions about returning to office and what all that means for the future, particularly for cities like Melbourne. And then the third part was engage. What happens in a period like this is interesting. I was chatting to Alan Joyce, and Alan at Qantas said, he just reflecting when he first started in the airlines, he got told, when you work in an airline, you're in a perpetual state of crisis. Well, it's the same in a bank, actually. It may not be perpetual, but there's always one you're just coming out of or just entering into. They're not always global. They don't always have big names like GFCs or COVID, but actually crises is a way of operating, and it's what banks do. And so really quickly, we got together people who've been around a lot in various parts of the world, and just reflected on what we learned. So for example, I've been in banking for 30 odd years. I'd lived through the 87 crash, the 92 recessions, the internet bubbles, the Asia financial crisis, the global financial crisis, the Latin American debt crisis. There's all sorts of Russian bond crisis. There's always something going on. And you can sort of draw on those experiences and say, well, what works and what doesn't work? And one of the things that we collectively agreed is that in a time of crisis, people, whether they're your staff or customers, feel overwhelmed. And they feel overwhelmed to the extent that there's just almost too much information. And people can be a little bit paralyzed in terms of what do you want me to do? And so our 4-point plan kind of created clarity, but that third part about engage was really important. In a time of that stress, we needed to actually step up our engagement with our people. So doing exactly things like this with our own people. So, we started webcasts daily at the beginning. When the heat of the moment, moved to weekly, and now we're at 2 weekly. We've massively improved and increased the level of contact we have with our customers to keep close to them, to give them reassurance, to understand what's happening in their businesses, etc. And we've broadly increased our engagement with the community through the media, etc., and also all of the other stakeholders like regulators and government. So that's been a massive uplift in engagement. And I'll talk a little bit about that in a minute, about one of the tools that we have there. And then the last one was to prepare for the future. History says, people say often that change is a constant. And while that's true, the rate of change isn't. And so the rate of change, all a crisis is an extreme period of change. And what we saw in COVID is that pre-existing trends just accelerated. And so trends, even working from home, was already a trend. It was just an emerging trend, and now it accelerated out of sight. Moving from cash to credit cards, moving from branches to digital, all of those things were already starting and happening, and we just saw them accelerate. And so we also know that in times of change, customers suddenly have all these new needs they didn't have before. How do I meet people from home? How do I order food? How do I live my life? How do I do my banking in this new world? And companies that step up, who understand those needs and then do things to meet them, succeed. And it shouldn't be a surprise that when you look at some of the greatest companies and sort of corporate stories in history, many of those companies were founded or had a growth spurt in a time of crisis, including people like Microsoft and Apple and Airbnb and some of the newer ones, but also some of the older ones like GE and Allied Signal and other great companies as well. They came from crisis because they saw and met unmet needs. And so we knew that this was going to be a time where there was massive opportunity for us. And so to be the bank or a bank for the post-COVID era, and what would that mean? That customers post-COVID were going to have new needs at an unprecedented level, and that for us to be on the front foot and be able to prepare for that was as important as protecting the bank. And so that's what we focused on doing. And that 4-point plan, as I said, started in March and has survived through, and even today, we organise ourselves still using those concepts. In my experience, and as I said, been through a lot of crises in my time in various parts of the world, I would say there is really one big difference this time, as opposed to even like the GFC, and that is the power of data. Data has been talked about a lot, and there's all sorts of academic papers and work being done there, and it's undoubtedly we all have understood the potential of data, big data, and etc. And I would say as a bank, what happened in this period of time, we suddenly saw it for real. We're now actually it's gone from theory to practice. The fact that all of you today use a piece of plastic or your phone to buy almost everything means we have unbelievable real-time data as a system. So that gives us enormous insight into behavioural trends, unmet needs, what people are doing, what they're thinking, what they might be doing next, where there's risks, what kind of red flags can we analyse. And not only is there the power of data, the cost of doing all that analytics has collapsed. And so it's suddenly gone from science fiction to reality. And so a lot of the engagement we've been doing with customers, regulators, government has been really sharing on an anonymised basis that sort of data. Well, what are people doing? Where are they spending? And I think that's been it's just been remarkable to be able to see. So for example, the shifts in people's spending in real time, to see how people, you all know that anything to do with making your home better has skyrocketed in customer preference. So renovations, home furnishings, buying home office equipment. Now, again, for us to be able to see that in real time and understand by postcode, by cohort, by whatever sort of demographic, what's happening there, to be able to measure what happens when Western Australia did open up, or Queensland, or South Australia, or Victoria, to be able to see that, not wait for the ABS and get 3-month data late, but actually see it today, is enormously empowering for, as I said, for the government, but also because it means that you're able to make policy decisions in real time as opposed to on a lag effect. So that would be so the comments. And then one last thing about the economy. just from a bank's perspective. I think one of the, when we were in March, when this was all happening and banks were thinking about the future, we did what we normally do, is we said, well, this is going to end badly, and there's obviously a lot of people are going to be in harm's way, and we should prepare for that. And so we built reserves and worried about people losing their jobs and all those things, and which is sadly true. But actually, as time's gone by, what we've learned is it hasn't actually ended quite as bad as people thought it might. And the reason for that is the massive and sort of overwhelming amount of government support that's been thrown at the system. Literally hundreds of billions of dollars has been thrown into the system, and a lot of that has stuck. So to give you a sense, the difference in banks between what we take on deposit and lend, in Australia, the banks lend more than they have on deposit. That gap, the gap between those two numbers, fell by $200 billion since February. $200 billion has fallen. To give you that, the equivalent in the GFC over the same period of time was 20. So it's tenfold. So the amount of money, your average Australian household or small business today, their balances in their bank, their deposits are up $100 billion higher than they were 4 or 5 months ago, right? So that's because small businesses, they're not paying their staff, they're not paying the bank, they may not have a lot of revenue, they've got grants from various support packages, et cetera, and people have been hoarding cash, saving. That wall of money has to be put to use at some point. And so it's quite remarkable to see the sort of rational response of the public, paying down their most expensive debt. Credit card balances have fallen 25% in the last 4 months. So paying down their most expensive, hoarding cash, as I said, savings balances through the roof, continuing to pay when they can. Of all of the home loans in Australia, there was about 10% of all home loans asked for a deferral. When the 6 months of deferral came true, 80% of those borrowers went back to paying full amounts. Of the 20%, the other 20, which is only 2% of the total, most of them live in Victoria. And so most of them asked for more time because they needed to see what was happening in Victoria. We would imagine that that will follow a similar pattern, and then most of those people will go back to full repayment. Of small businesses, about 20% of small businesses in the country asked for a deferral, much smaller number. Of those, 86% of them at the end of the first 6 months went back to full repayment. Even though they had the option to defer for another 4 months, only 9% of them asked for an extra extension. And of that 9%, vast bulk are in Victoria. Vast bulk of them are in industries, as you can imagine, they're in the accommodation, hospitality, sort of tourism related retail sectors that were closed. And so not at all surprising. And I think, again, that robustness is actually quite optimistic for the future. But again, it speaks to the level of support that the government has thrown at the problem. And so we while things can change, and that's what the one lesson of 2020, things change fast. Right now, where we're sitting here today, I think you'd have to be a lot more optimistic about the future than we had been over the previous period. So I might just sort of leave it there. There's lots to cover. I'm happy to answer any questions on any of that or anything else on people's minds, and how banks, ANZ in particular, but also the industry is thinking about the future and as either just a big company, but also in terms of our role in the community and providing credit.
No, perfect, Shayne. It's brilliant. Great overview. I might pick into a couple of those areas before I hand over to Chanel, if that's okay. Sure. So let's start with small, medium, large businesses. In your view, which of those sectors has borne the most significant economic impact through COVID?
Oh, small. So there's no doubt in our minds. So it's interesting. People say a lot, COVID doesn't discriminate. Well, actually it does. It does from an economic perspective, it does. It discriminates against small businesses, and it discriminates against, from a socioeconomic point of view, from people at the lower end. Why? Because they're just more vulnerable to shock. Small businesses don't have access to excess capital. They don't have multi-bank support. They don't have the sort of emergency savings funds or robust balance sheets that large businesses do. They can't go to the equity markets and say, look, I need to shore up my balance sheet. So they just are fundamentally more vulnerable, and they have borne the pain. But as I said, the data would suggest that the support packages have largely been remarkably successful. If you think about most crises, and I'm sure a lot of the people on this call have been around, and GFC is not that long ago. Normally crises actually do flow through and hit the big end of town. That's normally what you would see. Actually, your sort of textbook financial crisis, big end of town, highly geared companies fall over and it ripples through the economy to the small. This has been very different. This has actually hit the small business first, and it hasn't rippled through to large. With the exception of Virgin, there really hasn't been a large corporate in distress. Not really. I'm sure there are some, but at the really big end, there hasn't been. And why? Because large businesses went into this in pretty good shape. They weren't over leveraged, didn't have bad business models. They were sitting on, they were reasonably cashed up in the first place. And as I said, the funding alternatives to them remained open. Equity markets have been supportive, debt capital markets. So it's definitely the small end and as we've said, in those unsurprising areas of, hospitality, accommodation, tourism, that sort of, retail space, which has really, really hurt.
Yeah, it's interesting. 28 years of growth might explain why some of the savings in the smaller business wasn't at the same level as the major business or the larger businesses. You talked before about data and the power of data and
Yeah.
the learning that you now have in terms of using it. Are there traps then that Victorians should be aware of in this banking climate? For example, if I defer my mortgage, for example, does that start to affect my credit rating and affect my ability to get another loan down the track, given the way that data?
So it's a really good question. So those, data always has the ability, the potential to be misused. What happened really early on here is, like other countries, the government regulators and the banks got together and said, look, the best thing we can do here is buy time. And actually what's really interesting is time is cheap. So I'll get back to that why time's cheap in a minute, but best thing we do is buy time. We've got to figure out what the hell's going on. And what we know is that the best person to run that small business is the person already running it. And the best person to live in that home is the person already living in that home, right? So the best thing we can do is help them get through this, because this is something that was nobody's fault. It wasn't like the reason you're asking for a deferral is that you did something stupid, you were thoughtless, you were over aggressive, you were, you weren't kind of prudent. Not at all. It's in that sense, it was sort of a random black swan event that happened. So the best thing to do is buy time. I said, well, normally what kills banks is time's expensive. But in this case, time's cheap. I just want to give you an interesting stat. I think it's an interesting stat. This is a homeowner example, but it would relate to small business as well. The average homeowner, and so just quickly to answer your question, no. So we agreed buy time, and so the regulators said, hey, if you give somebody a deferral, that will not affect their credit rating, right? And the banks don't have to hold extra capital. Normally, in the normal course of business, if I forgave you a loan for a period of time, I'd have to hold extra capital against it. The cost goes up for me, etc. The regulator said you don't have to do that. So no, it doesn't impact anybody, and no, there's no shame in asking for those deferrals. There was no penalty. There was no sort of cost to your reputation, but also no cost financially. The average home loan on deferral in Australia was $370,000. It was a little bit bigger than the average home loan in the country. So call it 370. Now, when you defer a loan, you still have to pay, and the interest is still accruing, you just pay for it later. So it's the interest on interest. So the question is, at the beginning of the 6 months, I owed X. At the end of $370,000, at the end of 6 months, I still owe the 370, but now I owe interest plus interest on the interest in that period. What was the interest on the interest? For the average person, it was $60. Not $60 a month or $60 a week, or it was $60. So you're basically saying to mum and dad, you're saying, hey, for 10 cups of coffee or a dozen cups of coffee, you can buy the time to see what happens over 6 months. Well, that is a great deal, right? I mean, that is free. So that's what I mean about time not being the enemy. In other times, if rates were a lot higher, if rates were 5, 10, 15%, like they were in 92, when, mortgage rates were 15 to 20%, time is hideously expensive. And then what happens is the wrong thing to do is buy time. The right thing to do is act quickly. Sell your house, move on. Shut the business, move on. Today, the right thing to do is actually take a deep breath, buy some time, let's see how this thing goes. And that's been enormously supportive for everybody, including the banks. Frankly, it's in our interest. and it's absolutely in the interest of our customers.
Yeah, it's good. We talk about getting as many businesses through, because ultimately it's the businesses that employ. So if the business gets through, the job gets through as well. So let me take you to that. We've had the federal government budget, and I'll talk to that in a minute. We've got the state budget tomorrow. What do you want to see out of that? And almost specifically for Victorians, given the additional pain we've been through.
Look, I sort of steer clear a little bit on the policy thing. All I can, and honestly, you might say this is a bit of a glib answer, but I think the most valuable thing is just clarity and some level of certainty, right? In my experience, and again, this is a good example over COVID. Businesses are remarkably robust, resilient, thoughtful. People don't end up running businesses by accident. These are people who know what they're doing, and they're thoughtful and creative. That's how they got there. All they really want to know is, well, what are the rules?
Yeah.
Like, tell me the rules of the game and tell me where the boundaries are, and I can sort of plan to anything, really. And I think that, again, if you think through what happened over the last 6 months, okay, you're going to shut my business down and traditional, I'm not allowed to have people in, I'm not allowed to have employees, not allowed to have customers. Fine, I'll figure it out. And people did. Yep. And that's why you saw this massive innovation around, deliveries and takeaway, all that kind of stuff. So I think it's really about that. I think what, like sort of nature abhors a vacuum, well, businesses abhor uncertainty. I think that is it just becomes impossible to plan if you're worried about, well, I just don't know where the hell this thing's going. Do I open? Do I not open? Do I stock up for? Do I stock? The other point here is a lot of your members and a lot of our customers, Christmas, summer can be 40 or 50% of their turnover. And, when you're in that period, and so people need to know, look, do I stock up or do I hunker down and just sort of survive through? I think where we are today with the public health policy, people are feeling a lot more confident that they're going to be able to operate their businesses reasonably freely over the summer.
Yeah, I'd agree with that. And the other part of business is they're risk takers. So knowing the parameters in which they can work as a business owner, you can then assess, okay, what risk appetite have I got, and then move that forward. So just off the back of the federal government budget, there was a lot of stimulus in there, and you talked about the level of saving that we're seeing currently. Have we started to see spend in other states as the confidence have grown?
Yes and no. So spend, maybe not investment. So what you're seeing is, and we do this thing called a spend tracker where, as I said, because most spending today is on a card of some sort, we can track that literally as you're doing it. What we've seen is, so when WA opened up, which was sort of the areas, actually some areas of spend have skyrocketed as a result. So restaurants have actually restaurant spending is 18% higher than it was before COVID.
Yeah.
Right. So people have really gone out. I don't know about you where you all live, but I noticed over this weekend there was a lot of people out eating and drinking and whatever. So there has been, yes, you do see a remarkable sort of V-shape recovery when things are back online. But that's sort of, so yes, there is some spending from a consumer perspective, and it's in the areas you would imagine, and some of it is just reallocation. So, people can't they still can't really travel, not internationally, and all those other things. So that's usually a reasonable chunk of money for most families that they have decided to reallocate to other things. A lot of it's going in. We're seeing a big increase in what we sort of call pandemic proofing your home, or making your home more pandemic livable. People are saying, well, if I'm going to be working from home, I don't want to be doing it from the spare bedroom. I'm going to convert it into a home office, actually, or we're going to build a games room for the kids because we're going to spend more time at home, whatever. So renovation spending is, you can't really get an architect at the moment if you try to do plans. So there's a lot of that sort of spending happening, which is sort of replacement for people. Hey, we're not going to go skiing this year. We're going to be at home, so we'll spend money on the house. So we have absolutely seen that rotation of spending. What we're not seeing yet is small business investment. Yep. So small businesses really aren't. They're not. Now, some of that's just being prudent, and I think it's probably pretty sensible. if I was a small business, depending on what sector, I'd probably want to see how Christmas goes. I'd want to see summer trading. I want to understand how this all works before I double down on a new piece of equipment or, expand the factory or whatever it might be. So I think that's probably right. We don't imagine we're really going to see any of that till sort of March-ish next year, when people have sort of got through this next trading period. And then I think it'll be, confidence will be an interesting indicator at that point.
Yeah, we're of the same opinion. We think the period February to July next year kind of determines which businesses have been able to survive through it. Off the back of tomorrow's announcement, there's a debt bubble that sits there over a lot of businesses. Can they trade out? If they think they can, they will. If they can't, then I suspect that's when we'll see it fold. Two rapid fire questions before I hand over to Chanel for the audience questions. You've recently announced a reduction in both business and home loans. What prompted you, and then how did you communicate that out?
You mean in terms of the interest rates?
Yep.
Yeah. So, well, it's good old, like all of your business, good old supply and demand.
Yep.
There's a lot of supply money out there at the moment. There's loads of it. And demand isn't terribly high, a little bit higher on home lending than, everybody's getting excited about home loans. It's higher than it was, but it's still really low relative to where it used to be. So, my daughter's 15, she's doing economics at school. We were planning for her exams, talking about supply and demand, and it's no different for money. When supply's up and demand's down, guess what? Prices fall. Well, price of money's fallen. And that's exactly what's happening. And so, and the good, so we got to make sure our margins are fair for our shareholders, but that's really just seeing that happening on both sides. And, the small business, actually, the reductions in small business were much greater than they were in housing. Why? Because that supply demand imbalance is much greater. There really is almost no demand, actually. And so that's why you've seen that compression. My guess on that, if people are trying to think ahead, and while I can't give any sort of pricing guidance or interest rate guidance, I'd say those factors look pretty established. It's hard to see that shifting anytime. It's hard to see a surge in demand for borrowing. Yep. Neither is it hard to see a reduction in the supply of money. I don't think the Reserve Bank suddenly withdrawing all this liquidity or the government withdrawing sort of fiscal support. So I imagine money stays cheap for a while.
Yeah, so with that, your advice, fix it or keep it?
Oh, no. It always depends, right? I'll give the good economist answer. It depends. I mean, it does depend. I'll tell you what we are seeing, though. We're seeing more and more fixed rates. So normally in home loans, which is a good indicator, about 15% of home loans normally in Australia are written at a fixed rate. At the moment, it's running at 30. Makes a lot of sense, right? So fixed rates are usually at a lower rate than variable, but they're so low at the moment. They're like 2% for a home loan. So what people are doing, and I, again, my own sister asked, and I've given my advice to my sister, which is, I think that sort of blend makes sense. And what most people do, they don't pick A or B, they do a little bit of both. So I think we're getting a lot of customers saying, I'll do half fixed, half floating. I think those sorts of things at these rates make sense, to be honest. The problem we've got is, of course, we always say, if we'd have been here a year ago, 2 years ago, 3 years, 5 years ago, we would have said, oh, rates can't really go much lower. And of course they have. So you'd be pretty brave to call the bottom on interest rates, but I think a blended debt portfolio is probably the right thing to do.
There you go. Great. Chanel, I know you've got some questions coming in.
Sure do. Thank you, Paul. And thank you, Shayne, for answering our members' questions this morning. We know they really appreciate it. And thank you to all the members who have sent questions in. So I'll start with, is there any advice, Shayne, you would give Victorian business owners on how to best work with their bank over the next few months as they start to see their way out of this crisis?
Well, I guess it's sort of, again, it'll sound a bit trite, but, the best thing you can do is just stay really close. And, what banks don't like anything, is surprises. And, we can work through almost any scenario for a customer, as long as it's not a shock. It's when, so I think just being really transparent. I mean, I think, look, obviously we're not perfect. I'm not suggesting that for a minute, but I think the banks generally have been pretty supportive throughout all of this and have shown a willingness to, help, give extra funding. There's lots of tools available, deferrals, whatever it might mean. The banks, everybody understands that this was nobody's fault in a way. It's not, like as I said, so I think there's no judgments being applied here. But I think it's just about transparency and the willingness to be open. I tell you one thing that we did, which I, really early on, one of the things I said to all of our people, we got all our front line together. And I said, again, based on experience, you're going to learn more about your customers in the next month than you will learn in 10 years. And you will learn, and what's the most important, you're going to learn about their character. Forget their balance sheet and their assets and all that other stuff. You're going to learn what kind of people they are. Are they honest? Did they treat their people well? Did they do the right thing by their suppliers? Were they transparent with us? Did they tell us everything? Though that stuff is gold, because at the end of the day, that is far more important as a banker, character, as much as, capability, assets, and all of those other things. And, if I was a customer, I'd be really consciously sort of investing in building that character reputation, not just with the banks, but all of your partners and suppliers.
Absolutely. Thank you, Shayne. And this next one flows on quite well from that. The question is, what are your comments about turning on the credit tap to help stimulate the economy versus balancing credit risk for the bank, but also based on prudential lending requirements now in place, as well as those that are coming down the pipeline?
Yeah, I don't know that. So with very few exceptions, and I'm on the Bankers Association, and we within limits we do talk about the industry, and I don't think the banks have actually changed their risk appetite very much at all. So we know that today we approve at the same rate. So for every 100 applications, we're approving the same number as we always have. Yeah. So sorry, that was the dog. So we're approving the same number of applications as we always have. So it's not like, we're being tough. Of course, we're asking more questions. Of course we are. It'd be stupid if we weren't, right? You'd want to understand, you have to be more prudent in a time like this, but there's no evidence that there's no appetite to lend, but we need to be a bit more thoughtful. And the reason is a simple one, is that, normally our business is based on, the past is a sort of a good indicator of the future. And if you've, shown me your trading over the last 6 months and I'll finance it for the future, that's not a very reliable indicator at the moment. But I don't see that there's any restriction. As I said, that money, just again, to give people confidence, it's interesting, that money, that excess money that sits on our balance sheet, that $100 billion of cash that sits in bank balance sheets, etc., that actually does burn a hole in our pocket. It's not free. It's not like it sits here and we'll just leave it in the vault and we won't lend it. Every day we don't lend that money costs us money, a lot. Because why? Well, I have to pay a bank levy to the government on it. Every deposit, I have to pay 6 basis points. I paid $400 million to the government last year in bank levy. I've got to pay that for every deposit I have. I have to pay for most of those deposits. Most of it is not, it might be close to zero rate, but I'm still paying for them. And so it actually has a big drag on the bank. And so we have an incentive to lend it prudently, but there's no shortage of lending capacity.
Thanks, Shayne. And given Fido's interruption there, this next question is quite topical. One of the things that the Victorian Chamber's been campaigning for is the return of office workers. So we were delighted with yesterday's announcement that 25% could come back. In terms of your workplace going forward, how do you see this transition, and will working from home be a permanent part of the working environment in general and for the ANZ?
Yeah, so just to give you the stats, so at ANZ in Australia, we in our, forgetting the branches, which have largely stayed open. So in a big office, we have one or more in every state. We have about 14,000 people who go to an office every day. Yeah, about half of them in Victoria. So about 7,000 people came into an ANZ big office every day prior to all this. As of Friday, and again, we get the data in real time, we have about 950 people at the moment going in. So out of 14,000, about 950. In Melbourne, which is normally 7,000, on Friday, it's like 100. Right. So now we're an essential service. We're allowed to have people in the office for good reasons, but it's about 100. So we are seeing a return. We have a plan. We've always had all roles flex. That means we've always been really tolerant and respectful of the fact that people, it's really about when people work. I want to come in early. I want to go home early. I want to work 2 days a week. It's about when. We've always been pretty good about that. We've just, if you think about when on one axis, now we've just put where on the other. So now we've got a 2x2 that says we've got flexibility on where you work and when. We've got 4 boxes without going into the detail. there are some jobs that we call anchor roles, which say, actually, if you work in a branch, the when and the where are fixed. You must be in the branch at 9 o'clock on a Monday and you work X hours, and you can't be a teller from home. Yeah, so that's sort of fixed. At the other end of the spectrum, we have blended roles where people can be, can flex. We have allocated all of our people into those 4 buckets. So we know by team which suits you. It'll be really different if I'm a software engineer I'm working in cyber security, or I'm a relationship manager for small business. It'll be really different. Our teams, we've given the guidelines, and our teams decide through sort of intelligent design, if you will, which box they're in. Long story short, most of it, we are going to require our people to be in the office at some point. For most people, it'll be some point during a week. Not for some, it won't have to be in that week. It might be once a month or something. We see there is value in being in the office. There is all the informal networks, the cultural aspects, coaching, learning, all of that other stuff. We really feel strongly about creativity. It may not feel like it, but most people who work in a bank today are actually in some sort of creative role. They're building things, they're writing code, etc. So we see value in that, but we accept that it probably doesn't have to be 5 days a week. So we think the majority of our staff will be 3 to 4 days in the office and with a day or 2 at home. And what we're doing is we're just setting up guidelines about how that will work. What we can't have is where everybody's entitled to work from home and everybody's entitled to come into the office if and when they choose. That is not going to work. That'll be chaos. So we're going to have these sort of guided, narrow guidelines, freedom within some guidelines, and we'll see how it goes. I think it's all going to change, to be perfectly honest. So I do think it'll just be different. Look at me. I've worked for 30 years. I don't think I've ever worked at home, and never wanted to be perfectly honest. I like going to the office, I used to like putting a tie on. I'm actually, that was my preference. This has forced me to think differently. I've learned some different things. And it's like travel. I used to go to Sydney every single week. Right now, if you ask me, I find it hard to imagine in my future, even if I'm allowed to. I imagine that I'll go to the office most of the time, but I think I probably will do a little bit more from home. I don't know, it'll be a day a week, but maybe a day a fortnight or something. And I imagine I won't go to Sydney every week. I'll probably go once every month, because I think we've learned that things like this work, actually. So I think we're just going to go through a big learning experience, all of us.
It's going to be really interesting, and I look forward to checking in 6 months' time to see how much of those habits actually stick. So
I think what's interesting for Victoria, and I think actually it's a good thing. It might, the city, I understand being in the CBD, the mayor and others may have a different view, but because it's been so long, these habits are much more entrenched. It's not like, we were all working from home for 3 weeks, and because I think in that case you just go back to the way it used to be. I think it's become so entrenched. It's a little bit like the habits we're seeing with people who've moved away from cash to card. I don't think they'll ever go back. I think a lot of people in your social circle say, I can't remember the last time I touched a piece of cash. I don't remember seeing a $50 note. I don't remember that. And I think it's been so long that some of those habits are sort of permanent. And I think it'll be the same for the working from home. And that imposes really interesting questions about leadership. How do you onboard people remotely? How do you build a culture? How do you lead people? How do you performance manage people? How do you connect? This real cultural question is, I think, a really important one, because it is ultimately your point of difference as a company, is your culture. And so it's not impossible. You just have to think about it differently in a different world.
It sounds like we're setting up for a webinar part 2, Shayne, into the future as well. They're all great insights.
For example, the best words I heard, we do a lot of work with Atlassian, and they're good partners of ours. They use the word that we're unbundling the office. It's true. And if you go sort of think, what are all the things that we did that, if you sit down in your business, whatever, what are all the things that happen in an office, and you unbundle them, and you can say, actually, those things don't need to be done there at all. In fact, it's inefficient to do them in an office. And then there are these other things, actually, the office is by far the best place to do them, i.e., team huddles, creative work, whatever it might be. by far it's the best place to do it, as opposed to using technology. So I think it's just rethinking all of that.
Yeah, it's fabulous. I know we're coming up to time, and thanks again, Chanel, for taking those members' questions. I'm going to ask Karen Sobels, our president, to wrap us up for the day.
Thanks, Paul, and thank you, Shane. One thing I can guarantee you is your dog is very happy that you're home, for sure. There's no doubt about that. Probably have withdrawal symptoms when you start going back to Sydney.
Yeah.
And your issue about cash is very real. I was in the supermarket last week, and there was a man who was in front of me in the queue trying to count out the right change for his purchases. I thought the rest of the people in the queue were going to cause a riot because somebody was using cash. It was just quite extraordinary. So things have changed a lot, but what's been really helpful with you today, and also the help that you and your team have offered us over the journey, has been getting real metrics and real data, and not emotional things about what's happening, but really understanding the power of that data, where things are moving to and how things are working. And I know, just to give you a plug for ANZ small business customers, I know they can, and have been for some years, been able to access that data on credit card spend by postcode. So for those of you who aren't doing it, who are on the call, go and talk to your business banker and see how you can do that, because it's really quite helpful to get that real data to know how you work. It certainly helps us in our advocacy. But also interesting to hear what you've done as a business, and the fact as a global business you've been able to react, and how we can maybe learn some of those things in terms of how you've responded and how you'll be going forward. As Michelle mentioned at the start, I know that you work 24/7 as a bank CEO, not just because you're dealing with Australia, but because you're dealing with the world, and everyone wants a piece of you. And we just want to thank you for your time here today and for your candid responses. It's been fantastic. And we look forward to having you back for webinar part 2. We'll book that in now. Thanks, Shane.
Yeah, look, really happy to do it, and happy to do that, because I think those cultural questions are really important. Just to finish up on something, it's interesting. A lot of people keep talking about when do we go back to normal, and our sort of punchline at ANZ is, let's not forget, normal wasn't so great. So normal wasn't perfect. So we actually want a new future, and I think it's really about how do you embrace this opportunity. People have shown a willingness, remarkable willingness, to change habits and the way they think about things. How do you embrace that as an economy and as a community to build a better future, and not this idea that we want to go back, because we don't want to go back, we want to go forward. And so I think there's a real big opportunity, but I think a lot of it is that cultural issue, and I think that's a really deep area for discussion for yourselves and members, and certainly something we're thinking a lot about. Thank you.
Absolutely. Yeah.
I look forward to it. Thanks, Karen. Thanks again, Shane. Unbelievably generous with your time, given everything that's on your plate at the moment. I know our members appreciate it. So do everyone out there. Our next webinar, we have a lunch with Treasurer Tim Pallas on Thursday with the limited numbers. Not everyone can get in, so we're actually going to broadcast that. So look out for Thursday afternoon, where you'll hear directly from the Treasurer around what he announces tomorrow night. So with that, thank you, everybody. Thank you again, Shane, and please stay safe and go and have a great day.